There in this video, I want to cover US S corporations, US S Corps, and how they're treated in the UK for tax purposes. My name is Zeev Fisher. I'm a UK solicitor and an IRS enrolled agent in the US, and I advise advise expats on their cross-border tax matters. So, US S Corps. What is a US S Corp? Nobody outside of the US is familiar with that entity type. And for good reason, S corps are only used by Americans. So you have to be a U.S. citizen in order to use an S corp. You can't do that if you're just outside the U.S. It's sort of a benefit. It's a tax beneficial entity that was created specifically for Americans, and it's actually a very strange type of entity. In the U.S., having an S corp is essentially taking something that converts what is normally self-employment income. So you're running a business to run S corp, S corporation, or a US LLC that chooses to be taxed as an S corp. You're running that business, and you're selling. For example, you work and you sell services to people, and they pay you, and you deliver a service to them. Usually, this is self-employment income, so it's considered. I mean, you can be doing other things, but if you're offering a service, it's usually self-employment income. You're offering a service; they're paying you for your time, for your skills, etc. And in most cases, it's the work you do for them. It's seen as self-employment income. It's subject to self-employment tax. That's what would happen if you're not using an S corp. Self-employment tax is essentially Social Security, and that's it. I mean, it's just a self-employment income in most cases. And if you're using a standard US LLC, it will also be seen as self-employment income. Now you can use S corp for other things, but it's usually used for that particular purpose. Now, what is an S corp? So an S corp is essentially like a legal fiction, and the US government allows you to say, well, this is not self-employment income. This is a business, and the business pays me a salary. So you have to pay a salary to the people who are active in the business, and that salary has to be reasonable. So in an S corp, you have to pay a reasonable salary to members, to owners of this S corp who are active in the business. And it's not defined what a reasonable salary is, but it needs to be the market salary for someone like you. So if you were to hire someone in arm's length, someone that's unrelated to the company and pay them, then it should be a salary that would have been reasonable to pay for such a person. So you have to pay yourself a reasonable salary, and then you're taxed as an employee for that reasonable salary, and you withhold taxes the same way you would for an employee, and this is also subject to Social Security, but you're treated as an employee for any relevant purpose, which is weird because you're employed by your own business, but it does exist in other countries. I mean, in the UK, you can be employed by your own company. And then the remainder of the profits of the S corp, you can take them out as profit, and so you can pay yourself. It's a distribution. It's not a dividend, but it is a distribution, and you can pay yourself as profit, and it's not subject to Social Security taxes. And that's why accountants in the US love it so much, because you're essentially taking something that would have been self-employment income and subject to Social Security taxes for the entire income. And now anything outside the scope of the salary is not a subject to Social Security taxes, and it doesn't pay corporation tax. So S corps don't pay corporation tax. They are transparent entities. The profit passes directly to the owner of the S corps, and they don't pay corporation taxes before. So which is what would have happened if it was, for example, a C corporation. Or a UK limited liability company. So a UK limited company would have paid, or you could do that, right? Set up a UK limited company, and the UK limited company would pay salaries, but everything beyond the salaries will be subject to corporation tax and then to dividend tax. In an S corp, no, there's no corporation tax. The profits pass directly to the owner, and that's it. And the owner just pays tax in their individual capacity, but without paying Social Security. So there's a large Social Security saving, and that's why they're so popular. But what happens when you take your S corp to the UK, or most other countries, but specifically to the UK in this case? Then everything breaks. So sometimes the US accountants that don't do expat work regularly, they miss that, and they're so used to saying, oh yeah, you should use an S corp because you're saving Social Security. But if you take your S corp to the UK, disaster. And here's why. First of all, the salary. So under the treaty, and generally this is general principles of international taxation, but also under the US UK treaty, if you have someone who's from the US or in engaged in some level of business in the US, the business is incorporated in the US, but they're actually working from the UK, then taxes for their employment and social security are due in the UK. There are some exceptions to that, but that's the general rule. You are taxed when you live where you live and where you work from. So someone with an S corp, they now move to the UK. They have a salary because that's what the S corp is. It has to, you have to pay a salary. They have a salary, a wage, and out of that salary, they need to pay employment taxes individually and in the company level, and social security taxes in the UK. For that to happen, the S corp needs to register with the UK tax authorities. Very complicated, very difficult, and very unbeneficial, because if you register with the UK tax authorities, you now need to pay UK tax, UK national insurance, that's how the UK calls what the US calls Social Security, and employer's national insurance. And now you will need to go and try and convince the US authorities that this has already been paid in the UK, so it's all good. Uh, but now, okay, now you're subject to tax in the UK. Almost the same thing with the distributions. So the distributions are now not from an American business, because the American business is now potentially run from the UK. And if it's not fully run from the UK, it's at least partially run from the UK and have maybe generated a permanent establishment in the UK. So it's like, okay, there's UK presence now, and the UK will want to tax that business, potentially with corporation tax. So your S Corp could be subject to employment taxes in the UK. Now, an argument of trying to get back the employment taxes that you've paid in the US, corporation taxes in the UK, which is the primary benefit of an S Corp, that it doesn't pay corporation taxes. Now it's subject to corporation taxes in the UK. And the income, you also need, for the distributions, you also need to pay for this in the UK. From a tax perspective, it's a complete disaster, because you will pay double tax both in the UK and the US, and you will need to go back and try and chase that money in the US, because that's the right where you actually shouldn't have paid, or where the UK credit should have applied. And the US authorities may or may not give you some of that money back. But it's also a compliance disaster, because people think, oh, no, this is an American business, I don't need to do anything in the UK. Wrong. If you have employees in the UK, you need to withhold taxes and pay taxes in the UK. So S corps are generally complete disaster from UK tax purposes. Really not recommended. And if you're using an S corp and you have a pure US CPA advising you that an S corp is a good entity, they are right, but they are wrong, because they're not good entities for expats living in the UK. Not at all. So yeah, that's it on US S Corps. If you like complicated and nuanced cross-border content, subscribe to our channel and follow us.